Gold has no practical use that justifies its price. It doesn't feed anyone. It doesn't power anything. It just sits there, soft and heavy, doing almost nothing. And yet humans have killed for it, sailed across oceans for it, built entire economies around it for 5,000 years. Bitcoin is even stranger. It's not even a physical thing. It's a number in a database that millions of people have agreed to treat as if it were worth real money. And here's the part nobody talks about. Neither of them should work. By every rational measure of value, productivity, utility, cash flow, both gold and Bitcoin are essentially worthless. So why aren't they? Think about the last time you tried to understand investing. You read something about stocks. Made sense. Companies earn money. You own a piece. The piece is worth something. Then you read about real estate. Also made sense. Property produces rent. Rent is income. Income has value. Then someone mentioned gold. And the explanation you got was something like, it's a store of value. People trust it. That felt like a non-answer. A store of value because people trust it. Trust it because it stores value. It's circular. It explains nothing. Then came Bitcoin, and the conversation got even stranger. People started describing it as digital gold, as if calling something gold explains why gold works in the first place. Most people quietly accepted these explanations and moved on. But if you actually stop and ask the question, why does any of this have value? You end up somewhere deeply uncomfortable. You end up realizing that the rules of value you were taught in school don't fully apply here. And if they don't apply here, you have to wonder where else they don't apply. Here is the uncomfortable answer. Gold doesn't hold value because of what it is. Gold holds value because of what enough people agree it represents. That distinction sounds small. It isn't. It means the most powerful force in economics isn't productivity or scarcity, or even supply and demand. It's narrative. A shared story that enough people believe and act on. And once you see that, you can't unsee it. Because it's not just gold. It's not just Bitcoin. It's almost everything humans have ever used as money. Consider Liam. Liam is 34. He works in logistics in Columbus, Ohio. A few years ago, he decided to get serious about money. He spent 6 months reading books, watching videos, trying to understand how wealth actually works. And he kept hitting the same wall. He could understand why an apartment building was worth money. It produced rent. He could understand why a company was worth money. It produced earnings. But gold made no sense to him. It produced nothing. He bought a small amount anyway, because everyone told him it was safe. Then the market dropped in early 2020. Stocks fell 30% in a month, and gold went up. Not because gold suddenly became useful. Not because it started producing income. Because millions of people simultaneously decided that in a moment of uncertainty, they wanted to hold something that had always been trusted. The trust itself was the engine. Liam sat with that for a long time, and then he started asking a harder question. What else works this way? Here is the first hidden rule. Scarcity alone has never been enough to create value. Think about that for a moment. There are things in the world that are genuinely rare, rarer than gold, rarer than Bitcoin, that are worth almost nothing. Specific configurations of dirt, certain types of rock, air on the moon, all of these are scarce. None of them are valuable. Scarcity is a necessary ingredient, but it's not sufficient. What converts scarcity into value is agreement. Specifically, enough people, over enough time, choosing to act as if the scarce thing matters. Gold had that agreement built over centuries through a process that had nothing to do with gold's chemistry. It had to do with gold's story. The story goes like this. Gold is rare, Gold is durable. Gold doesn't corrode. Gold has been used by every great civilization. Gold is what kings kept in their treasuries. None of those facts make gold intrinsically valuable, but together they form a narrative so old and so widely shared that it functions like a physical law. People trust gold because their parents trusted gold, because their grandparents trusted gold. The trust is the inheritance. And here's what makes this deeply strange. It works in reverse, too. In 1637, in the Netherlands, a single tulip bulb was selling for the price of a house. Not because tulips were rare in some cosmic sense, not because they produced anything, because Dutch traders had agreed, collectively, that tulip bulbs were a symbol of status and wealth. The story was strong enough that the price climbed for years, until it wasn't. Until the agreement collapsed overnight, and people were left holding flowers that cost more than their homes. The tulip mania didn't fail because the tulips changed. It failed because the story did. Here is the second hidden rule. The most durable stories attach themselves to something real, something physical, something finite, something that resists the most obvious ways of cheating. This is why gold outlasted tulips. Tulips could be grown. Supply could be expanded. The scarcity could be undone. Gold couldn't be faked in the same way. You couldn't manufacture it in a warehouse. The supply grew slowly, predictably, through the hard work of extraction. That physical constraint gave the gold narrative something to anchor to. A story backed by nothing can collapse instantly. A story backed by something that genuinely can't be duplicated has a fighting chance. This is the insight Bitcoin's designers understood. They weren't just building a currency, they were building a constraint. A mathematical rule that said, there will only ever be 21 million Bitcoin. Not because of nature, not because of physics, but because the code said so, and enough people trusted the code. Digital scarcity. The same logic as gold, a fixed supply that the story could anchor itself to, but enforced by mathematics instead of geology. Whether that constraint is as durable as gold's is still an open question. Code can be changed, at least theoretically, if enough people agree to change it. But the principle behind it is identical to the principle behind gold. The narrative needed something to hold on to. It found it. Now let's step back and look at the full picture. Because this isn't really a story about gold or Bitcoin. It's a story about how human beings have always created value. For most of history, money was a physical object. Shells, salt, beads, metal. Each one of those things worked as money, not because of what it was, but because of the social technology built around it. The agreement, the expectation, the trust that if you accepted this thing today, someone else would accept it tomorrow. Then, gradually, money became paper. Paper that represented gold. Then, paper that represented nothing but the promise of a government. The US dollar stopped being tied to gold in 1971. Since that moment, the dollar has been backed by one thing: the collective belief that the United States is stable, powerful, and will honor its debts. That's not nothing. The US has the world's largest economy, the world's most powerful military, and decades of institutional credibility behind it. But it is, at its core, a story. A story so widely believed, so deeply embedded in global trade and finance, that it functions as reality. And here is what Liam eventually understood. The assets that win over time are not the ones with the most productive capacity. They are the ones whose stories are hardest to kill. Gold's story survived the Roman Empire, the fall of medieval kingdoms, 2 world wars, the Great Depression, and the 2008 financial crisis. That's not luck. That's a narrative so deeply rooted in human psychology, in our association of this specific metal with permanence, with trust, with power, that it has outlasted every system that tried to replace it. Bitcoin is attempting to write a new version of that story, one built for an era when people trust math more than institutions, one built for a world where the old guarantors of value, governments, banks, central authorities, have spent decades slowly eroding the trust they were given. Whether it succeeds in the long run, nobody knows. But the architecture of the attempt is identical to gold's. Find a constraint. Build a story around the constraint. Get enough people to believe the story that the belief itself becomes the value. And notice what this reveals about every other store of value in history. The US dollar became the world's reserve currency after World War II, not just because the US economy was strong. It became the reserve currency because of a deal made in Bretton Woods, New Hampshire, in 1944, where 44 nations agreed to price their trade in dollars. That agreement created demand. Demand sustained the story. The story became reality. For 80 years. When that story eventually weakens, and all monetary stories eventually weaken, something will compete to replace it. Not because the replacement is more productive or more rational, because enough people will decide to believe in it instead. Liam didn't become rich from gold or Bitcoin. That's not the point of his story. The point is what he understood after sitting with the question long enough. He looked at his own life and started seeing the same logic everywhere. His college degree doesn't prove he learned anything specific, but it's a credential, a symbol that enough employers trust that it functions as real value. The neighborhood his house is in, the house itself is wood and drywall. What makes it worth $400,000 isn't the materials. It's the story of the neighborhood, the schools, the safety, the history of people wanting to live there. His company's brand. The product is fine, but the brand is worth more than the product. Because the brand is a story customers have already decided to believe. Value, almost everywhere he looked, was narrative dressed up as fact. And here's where it gets even more interesting. In January 2026, gold hit an all-time high of $5,589 per ounce. Not $2,000, not $3,000, nearly $6,000 for a single ounce of a metal that produces nothing. It got there because of everything we've talked about. Inflation fears, geopolitical tension, a weakening dollar, central banks around the world quietly moving reserves out of dollars and into gold. The story held. The story got louder. The price followed. But then, almost immediately, gold fell more than 10% in a single month, its worst decline in over a decade. What happened? The dollar strengthened. US Treasury yields rose. Some institutional investors who had built large positions started unwinding their trades. And here is what that tells you. Gold doesn't fall because it suddenly becomes less scarce. The supply didn't change overnight. It falls when the conditions that make people reach for the story weaken. When confidence in the dollar recovers, gold's story loses some of its urgency. When interest rates rise and cash becomes more attractive, a non-yielding asset like gold looks less compelling. When the fear that drove people into the story fades, even temporarily, so does the price. This is the other side of the rule. The same force that builds value can erode it. Story backed by real constraints, like gold's physical scarcity, doesn't disappear. But it breathes. It rises when people need it. It retreats when they don't. Understanding that is the difference between seeing gold as magic and seeing it as what it actually is. A mirror, reflecting the level of fear, uncertainty, and distrust in the world at any given moment. And here is what makes this more than an abstract observation. This logic is invisible when the stories are working. Nobody questions why gold is worth gold. Nobody demands a logical justification for why the dollar holds value. The story is so old, so embedded, so universally accepted that questioning it feels irrational. That's by design. The most powerful narratives are the ones you forget are narratives. They stop feeling like agreements and start feeling like laws of nature. But they aren't. They never were. And here is the deeper, more unsettling realization. This means value is democratic in a way that feels uncomfortable. It isn't determined by experts. It isn't determined by fundamentals. It's determined by what enough people, for long enough, agree to act on. Which means it can be right for the wrong reasons. It can be wrong for the right reasons. It can be built on something real or something entirely imagined. And the difference doesn't always matter, as long as the story holds. That's not a comfortable conclusion, but it's an honest one. Strip away the price charts and the financial news and the arguments about whether any of this is a good investment. Ask the simpler question: why has gold worked for 5,000 years? Not because of its chemistry, not because of its conductivity or its resistance to corrosion. Because human beings looked at this rare, shiny, useless metal and agreed, generation after generation, that it meant something. They agreed so consistently, across so many cultures and centuries, that the agreement became indistinguishable from truth. That's not irrational. It's the most human thing imaginable. We are the only species that builds value out of meaning, that assigns worth to symbols, that looks at a piece of paper, or a bar of metal, or a number in a database, and decides, this matters. Bitcoin might become the gold of the digital age. It might not. But the fact that millions of people are asking that question, the fact that the argument is even happening, tells you something important. It tells you that the story of gold is not unique to gold. It tells you that every generation gets to decide, from scratch, what it believes in. And what it believes in becomes, in ways that feel almost magical, real. The hidden rule isn't really about gold or Bitcoin or any specific asset. The hidden rule is this: value is not discovered, it is agreed upon. And the most powerful economic force on Earth is not productivity, or scarcity, or innovation. It's the moment when enough people look at the same thing and say, yes, this matters. That moment is where all value begins. And it always has been.